We just had a information-packed morning, a workshop jointly organized by the Vienna Institute for International Economic Studies and the Austrian National Bank on the Ukraine economy, with the title Progressive Reforms and Challenges Ahead. In the first session, we were fortunate to have Deputy Governor Dmytro Sologub with us, and he gave us a canvas of the macroeconomic situation and, of course, in particular, the challenges which the central bank has in relation to inflation, monetary policy, exchange rate developments. Governor, could you please tell us a bit what is the range of issues you are dealing with at the moment?
Well, I mean, Ukraine is emerging from quite huge crisis, which we call a perfect storm. Last year's situation has been already better, I would say, compared to the 2014 or early 2015. Partly thanks to the policies which have been introduced both on the part of the National Bank and the government. I'm talking about tight fiscal policy, administrative restrictions on FX market, tight monetary policy, but also thanks to the alleviation of security risk and also huge financial support Ukraine gets from foreign donors. On the other side, this improvement we have seen so far have been only slow and not yet sustainable because I mean, tight macroeconomic policies can only help you to stabilize the situation, but there should be sustainable structural policies to generate sustainable economic growth in the country. There have been some progress, but it's not yet uniform, and therefore I would say the general improvement in the business environment and investment climate and consequently inflow of both domestic and foreign investment is lacking so far. Plus Ukraine got a negative shock from terms of trade at the end of last year and another round of retaliatory measures from Russia. So for the central bank at the moment, what is important is to keep macroeconomic stability in terms of banking system, where we engineered a major banking system cleanup and now trying to revamp the banking system to build a new banking system, I would say. Bring inflation down to our target of 12% by the end of this year, with an eye in further decline in the inflation to the eventual target of 5% in the midterm. And smoothing extreme exchange rate fluctuations, because exchange rate is a nominal anchor, psychologically still plays an important role in Ukraine.
The challenge is now that now that the contraction has more or less bottomed and one has very low but still a positive growth perspective, the new challenges again are imbalances going to return on both the current accounts, but of course also the other big issue is whether the fiscal policy scenario goes in the right direction and whether production, the structural economy is adapting to a very different situation of what it was before the crisis. How do you see actually the sustainability of these circumstances in the Ukrainian economy?
Well, I would say, yeah, I mean, economy is to undergo substantial structural adjustment because there is no way it come back to the previous economic structure it had before. Just one simple reason, because there was a lot of destroy in Donbass, but also I would say to some extent it's a creative destruction. You might not need even to come back to that structure because it was heavily skewed to the low value added exports, mostly destined to the one country, Russia. So it was non-diversified, it was low value added. And on the other side, domestic business climate was pretty difficult, and therefore a lot of industrial and consumer goods were imported. So I do believe in the future the model should be more sustainable, more balanced between domestic production and exports. Ukraine used to have very high export to GDP ratio in the range of 60% and so on, despite having potentially vast domestic markets. So if you look at Poland and other countries in Eastern Europe like Romania, they have export to GDP share lower, 40% and so on. So the further future kind of direction for Ukraine is to be more balanced between domestic market and export markets. There are very good, I would say, sectors in Ukraine which still could generate high value. It's agriculture. There are evolving sectors like IT, for example, and so on. But there is a potential for domestic production of simple industrial and consumer goods. Yeah, I mean, we are not talking here about forced import substitution. We are talking here about creating necessary preconditions, prerequisites for strengthening and widening production base of the country. And two necessary prerequisites is basically macroeconomic stabilization and establishment of level playing field in terms of business climate, law system, and so on. That's how we in the central bank see the strategically situation. And regarding fiscal policy, I would say, yes, it's extremely important factor to have a sustainable, sound fiscal policy, especially in the side of NBU plans to introduce inflation targeting, because the absence of fiscal dominance is actually the first and most important prerequisite for success of the inflation targeting. We have seen the progress in it. I mean, yes, the National Bank had to be involved into the financing of fiscal and quasi-fiscal activities back in 2014, 2015, because when the war started, there was a huge drop in the revenues in the eastern Ukraine. On the other side, you had to finance increased defense spending. With Naftogaz, deficit was quite high, and then we engineered the major cleanup of the banking system, and it resulted in the substantial payments out of deposit insurance fund. But most of these problems are already behind us, and for this year we actually do not expect any substantial fiscal problems, assuming our baseline macroeconomic scenario, continuation of IMF program, and so on.
On the first part of your answer, in your talk you mentioned that there was still very little sign of what you called import substitution, in spite of a dramatic fall of the domestic currency, which would of course make imports extremely expensive. So there's still little response from the domestic production to this challenge. And of course, one knows in the long run there will be some recomposition of exports and the reorientation of exports. But again, at least the analysis shown in this workshop didn't show that much has happened so far. So how do you think this weakness of investment, but also the interest of foreign investors into the Ukrainian economy can be furthered?
I mean, it definitely would not happen overnight. Yeah, I would kind of rephrase it. If we would start it at the end of 2014, this year we can see already a substantial fruits of Ukrainian exports exploring the new markets and the widening of domestic production base. Yeah, on the individual basis, so far you actually see some foreign companies who are coming and increasing exposure to Ukraine. You have seen some particular Ukrainian products who are opening new markets. Yeah, and all products. Some of them low value added, like food. Some are more high value added and so on. Definitely it takes time. Yeah. What's also important here that in some cases, especially with high value added products like machine building, the opening new markets also requires probably changes in the ownership of these companies and so on. So Ukrainian machine building industry was very much focused on Russia because it was still a part of the single production chain during Soviet time. But if you look at big Ukrainian machine building enterprises, some of them are pretty competitive on the global scale. But since the market there is quite competitive, you might need kind of change of ownership. So I think privatization is also a very important element in definitely developing a sustainable economic recovery in Ukraine.
So thank you very much for these insights and a rather positive outlook over the medium or long run. Thank you, Governor.